All right, that says we're going. So, good morning, everyone, if you're watching it this morning. If not, then good afternoon, good evening, whatever. So, hopefully, you guys have gotten used to the fact that we do a video blog subsequent to our actual blog going out. So, it goes up on the website. We have an email subscription list. If you want to get on that, you certainly can. Don't hesitate to ask. And then we do a video blog to describe it. I'm not in as much detail most of the time, and certainly true this time around. This has been a long time coming. I spent years, although it seems much quicker, right? The days are long and the years are short. In any case, learning about reverse mortgages or HECMs, home equity conversion mortgages. And the blog post has a lot of really good information in it about them. And when it comes to those generalities, like bare minimums for being eligible, being qualified, and what kind of things you absolutely have to do in every reverse mortgage, no matter who you are. But this is undoubtedly the most complicated and most heavily regulated mortgage product that there is. It makes a lot of these other ones seem relatively simple. Not that there's anything simple about a mortgage, but these are very, very complex products with a wide array of options, different things that might fit the bill for different situations. So it's really important that if you're going to talk to somebody about a reverse mortgage, that you're talking to them about your unique situation and not in generalities. But as those generalities go, obviously the first thing that's on everybody's mind is, does the bank get the house? The answer is no, unless you want them to. And even then, all they're going to do is sell it and then either give you or your heirs or your estate the proceeds, that kind of thing. You can also sell it yourself. Your heirs can purchase it, they can refinance it. There are a lot of options there as well. We talk briefly about the qualification, and we talk about a lot of things that most people don't know about, like a line of credit or an annuity. Those kinds of things also exist in conjunction with a reverse mortgage, with a HECM, if you want to do something like that. And of course, if it's qualified, and bear in mind, this isn't like the typical mortgage where we have credit qualification and income qualification. Those things pretty much go out the window. It's really about age, equity, what are interest rates doing that day. This is an FHA product. They all are. There are some private products if we go high balance, but for the most part, reverse mortgages are FHA products. So they're very heavily regulated. They obviously follow with what the mortgage-backed securities market is doing and with what FHA loans are doing when it comes to interest rates. Yes, there are closing costs. Pay close attention to that. One of the big ones, not just because it's an FHA loan, because it's relatively high risk, not necessarily just for the bank or for FHA, but if somebody took a reverse mortgage out at the minimum qualifying age of 62 and lived in that house until 92, 30 years without having to make a mortgage payment, there are a lot of things that could happen in that time frame. So the closing costs, particularly the mortgage insurance premium, these are things to pay close attention to. We do talk a little bit more about your heirs, how your estate, how they can deal with it, that kind of thing. Once you depart that residence for the last time, whatever that may be, you decide to move, you go into assisted living, you pass away, these kinds of things. Looking at it as another piece of the puzzle with aging in place options like modifying your home to be, let's call it ADA compliant, or downsizing. Yes, you can use a reverse mortgage for a purchase. Doing ADUs or border income, what kind of assistance programs might exist, how to focus on elder law planning. The bottom line is that there is a lot to unbox with this program, with this product. So it's really, really important that you do that with somebody that specializes in these and that you do it specific to your situation. Also remember, and I'll end with this, that because this program, this product is so heavily regulated that no matter who you are, you do have required counseling from Housing and Urban Development. HUD requires counseling for every HECM borrower on every reverse mortgage no matter who you are. So do bear in mind that that's something as well, because everybody wants to make sure that this is the right move for you. So that's it this time around. I went really long, and it's nowhere near as long as the blog post, and it's nowhere near as long as the conversation you should have with someone if this is something that you're contemplating. Okay, so that's about the extent of it there. I'll leave the rest of it to the blog or to you guys reaching out, which happens on the regular when it comes to questions about reverse mortgages. So that's it. You guys have a wonderful day. We'll see you again next time with our next blog post. And hopefully you guys are well. We'll see you soon.